I used to say life insurance should be renamed to death insurance because it only paid out at death. And that's not true. I was wrong when I said that years ago because there are so many benefits to life insurance while you're alive.
We've been doing this for 20 years and serving hundreds of families. We're going to bring solutions to your situation.
How do you choose a financial advisor? How do you know who you should
That's
work with?
the value of that 210 core, moving everything towards a purpose on purpose.
Hey everybody, welcome to your Retirement Blueprint podcast today. My name's Kendall and I'm alongside my co-host today, Mr. Phil Cooper.
Hey everybody, thanks for joining us today.
I'm excited about today's topic. We're going to talk about life insurance today.
That sounds exciting.
You want some great?
That sounds awesome. And I just heard the clicks. They just left the show right there. They just took off. Don't leave yet. Trust me, this really will be exciting.
You want to hear a grandson story first?
Of course I do.
So,
is it my grandson?
Yeah.
Yeah, of course I do.
So yesterday I took Kai to do some work with me, and his job was to scoop some stuff up and put it into a garbage can. And he wasn't really doing it, and so I said, hey, here's the deal. If you work hard, I'll pay you by buying ice cream. Granted, the kid's 4, for those of you listening. And he looks
You know
at me,
what? When he comes to my house, he doesn't have to work for the ice cream.
I know.
Just so you know.
We got to, yeah. And he looks at me, and he points at me and says, Dad, you know what? Since I'm working for you today, I'll buy you ice cream.
Oh,
So I think we got a little learning to do on how
it just tells he's got a giving heart.
Well, it wasn't
He's very
said that way.
generous.
It was more like he
provide
thought,
for the guy who won't do anything. So since he's got to do all the work, he's going to take care of you.
Yeah, he just had it backwards. So it was funny.
I have hope for him.
Today's question is from Paul from Florida. And the question is it wise to convert all of your IRAs or 401ks at once and just bite the bullet on taxes now?
Well, Paul, thank you for the question, first of all. Let me back up for a minute, Kendall, if I could.
Yep.
First of all, IRAs and 401ks, what we tell people all the time, that's nothing more than an account or a bucket of money that you just haven't paid any taxes on.
Yeah.
So when you reach in and pull money out of that bucket, you've got a partner in there called the IRS. They want a piece of that. Depending on what state somebody lives in, sometimes the state that you live in will want a piece of that too. Now, when the state of Illinois or the state of Florida, by the way, Paul, they don't require anything to be paid to them in taxes, but the federal government does.
Yep.
So here's what Kendall and I are doing right now with folks, and that is looking really deeply in their IRAs and 401ks, saying, do we think we're going to go into a rising tax environment in the future? If we think that, then should we go ahead and pull some of those dollars out now, convert those dollars over, cause a taxable event, but do it while we think taxes are on sale, and push those into something like a Roth IRA? Or you brought up life insurance, maybe even going into some life insurance. And then Paul's question was, should I do all of that at one time, right? Okay. Paul, the answer to your question is maybe. Here's why we say that. I don't know how much is in your IRA or your 401k, but let's walk through a couple of examples here. Let's say that somebody has an IRA that they only have maybe $50,000 in it.
Yep.
Then it might make sense, Paul, for you to pull all of that money out at one time and convert all of that to a Roth IRA or to put it in some kind of cash value life insurance. The reason we keep bringing up life insurance, we'll talk about that, I'm sure, through the show today. Those are two vehicles the IRS lets us use for complete tax freedom down the road. Okay, so that being said, Paul, here's how you determine whether that's a good idea or not. Figure out your income, whether you're working, whether you have Social Security, pension, whatever that is. This is how much income comes into your house. What's your tax bracket based on that? And then layer on top of that how much is coming out of your 401k, and then you'll be able to tell how many dollars in taxes you're going to pay. If you don't like the number, then consider splitting it over a few years.
Yep.
Now, if a person has $1 million, which we see all the time, right? $1 million, $500,000, $5 million in their 401k, you pull all that out at one time. Yes, you can do it. You certainly can do it. Your choice. And we always jokingly, not so jokingly, say you will have your face at the IRS as customer of the month. They will love you for that. So we should apply a strategy to that. In other words, we do this every day. Our team builds plans every day. We do a tax plan for this to say, is there a better way to spread those taxes over a series of years and try to reduce some of that? So the answer, Paul, is this. Maybe you need to get a team of somebody's involved. That's what we do every day, is to help you figure out, should we do it all at once or over a course of time? I hope that wasn't too lengthy.
No, it wasn't. I'm going to add on to it. So, real life scenario. I have a client that is going to be retiring, but they're retiring young, not going to be at Social Security age yet, maybe wouldn't be to full pension, and they're seriously considering converting a fairly sizable IRA or 401k, whatever it is, all in 1 year because they've got money saved in the bank to live off of,
Okay.
right? And they're going to delay their pension. They're going to delay their Social Security. Well, they're not going to delay their Social Security. They're just not old enough yet.
Yeah, okay.
Right? And so in their scenario, it might actually make sense
It
to
may make
do
sense. Yeah.
a really big chunk all at once. Obviously, everybody's situation is different. We are not CPAs. You need to consult with your CPA, and we have people that we can point you to if we need to. Everybody's situation is different. Don't just take that one question and go make your decisions off of that, I guess.
Yeah, the answer is it depends.
Yeah.
And if you want to know if you'd rather have a deeper analysis, we'll run it for you, but it depends.
Yeah. So that kind of segues into life insurance a little bit.
Okay.
But let's back up before we just go straight into that. Let's talk about why someone needs life insurance, I guess. Most people think that it's the people that are my age that need the life insurance, the people that are raising the kids, the people that are got a bunch of debt, a mortgage, whatever the case may be, and which is true, right?
It is.
But I think there's a stigma out there that says once you retire, hey, you don't need
need it
life
anymore.
insurance
Yeah.
anymore.
You've saved enough money. You're self-insured or
Right.
whatever. Yeah. You don't have a mortgage. You're not raising kids anymore.
Yeah.
You're not paying for college tuition or weddings and things. I'm going to combat that theory a little bit. Yes, when you're a younger person like Kendall and you're raising kids, it's a responsible, prudent thing to do to have enough life insurance to cover the mortgage, to cover the kids' college, to cover the things that are important to you and your family.
Let's go into that for a minute. So that most times people are going to use term insurance for that, right? Term insurance is just you paying a premium
Certain term.
for a certain period of time for a certain amount of death benefit. There's no cash value building, anything like that. You're either going to pass away in that term, whether it's 10, 20, 30 years, whatever the case
you're
may
not.
be.
Yeah.
And you're going to get you're not going to because you're going to be gone, but your family or whoever your beneficiaries are going to be is going to get that payout. And that's what most people look to when they're talking about younger kids, mortgages, things like that. I think the statistic is, I don't know this for sure, that 2% of all term insurance policies actually pay out. So it truly is like your car insurance. Like if you don't get in a wreck, you're not getting anything out of it.
Yeah, right.
And statistically, not
You're
very
not
many
going to.
people
Yeah.
get in a wreck.
98 out of 100 people never collect on it.
Right. Yeah.
Exactly right. The question was about life insurance. Yeah, your age group, of course. You've got two little boys, right? You got a young bride that you've got to care for in the event of your passing. However, when you're my age and older, life insurance has. I used to say life insurance should be renamed to death insurance because it only paid out at death. And that's not true. I was wrong when I said that years ago because there are so many benefits to life insurance while you're alive.
Yeah.
For example, we answered Paul's question a moment ago about taking IRA money and rolling it out to Roth IRA. You can do a very similar concept by rolling dollars out of IRA money, paying taxes, and putting them into life insurance if you want some tax freedom later for either your heirs or some tax-free benefits to yourself for income. There's life insurance kicks out tax-free income, tax-free benefits to your heirs. There's a lot of different things it does. So the question, I think, was, do I need it as I'm aging? If your goal is to pass along dollars to somebody else in a tax-free manner, you need life insurance because if you've got an IRA or a 401k, somebody's going to pay tax on those dollars. And generally speaking, if you pass away and leave an IRA or a 401k, if you're an average age American, average lifespan age American, you're going to leave those dollars to your kids in their maximum earnings years.
Yep.
So here you got a kid that's making a lot of money in their job, and you leave them all this money. Now all of a sudden their income and all the money you just left them all got taxed at the highest brackets possible. Life insurance comes in and it's tax-free, can pay those tax bills for the kids behind you. So depending on the person's goal, do you need life insurance later in life? Absolutely.
Yeah.
If your goals are either tax freedom for yourself, tax freedom for an heir, or you just want to make sure that you're what we call leveraging your estate. So if I've got $100,000 And if I could buy a $500,000 life insurance policy, I just left $500,000 to my kids.
Yeah.
And by the way, you're welcome.
Yeah.
Yeah.
Hey, thank you.
Kendall loves life insurance when it's on me.
Yeah.
Yeah.
But to that point, real quick, I'm going to back up because I feel like we breezed over the term insurance thing. I don't want people to think, just
We're not anti-term insurance. No.
Just because 2% only pays out
No.
doesn't mean you shouldn't have it.
You might be a 2%er.
Yeah, you might be a 2%er. And to that point, though, those 2% of those people, like when that happens, almost we see it more often than we would like to, where people pass away way younger than they planned on, didn't have any life insurance, and it leaves their family in a world of hurt.
Huge.
And also, to that point, a couple $100,000 sounds like a lot until you've got 2 kids in daycare and college to pay for, and now you don't have 2 people funding retirement accounts and all those types of things. So I just wanted to go back to that because I didn't want anybody thinking, hey, just because only 2% pays out, we don't need term insurance. But then go to later in life, real life story, right? Whenever we're doing events, one of the things I always talk about is what happens when someone's gone, right? And so, if you're retired, or older, and you got to think about what's going to happen to your income when someone passes away, right? Mm-hmm. So if you're married, bigger Social Security is going to stay, smaller one's going to go away. Mm-hmm. Depending on how you set your pension up is going to determine, whether that stays or goes or whatever, or if you got rental properties and, the husband took care of all that or the wife took care of all that and the other one had nothing to do with it, maybe that's going to disappear. And so making sure that you have enough life insurance to come in and offset that income is real important. And I think a lot of people don't think about it. Real life situation, my client retired recently, in the past couple of years, younger, married to an older gentleman. Life insurance was running out. We were trying to get in more life insurance. They decided it was too expensive. Wasn't that old, right? Didn't think he was going to pass away. And sure enough, he passed away. And there was a lot of income lost and so if we could rewind that, it makes
it's also with term insurance, Kendall. We're not anti-term. Please, I know Kendall stated that. We're not anti-term insurance people. But there's some concepts that are being thrown around out there and have been for a long time. We've been combating them for a long time about invest in term insurance. Mm-hmm. Buy term insurance and invest the difference.
Right.
Because term insurance is cheaper. Well, that's a great concept. Mm-hmm. Until things happen. For example, I've been doing this a long time.
Yeah.
There are people who bought into that concept a long time ago, and they bought a 20-year term policy, and then they decided they were going to invest the difference, and then they lived long enough that term policy expired.
Yeah.
So they decided they wanted more life insurance. But in that 20 years, someplace they were diagnosed with cancer or had a heart problem. They're not insurable.
Yeah.
Game over on insurance for them. And so
Great
that concept works in a perfect world. The problem is we don't live in a perfect world, right?
Yeah.
So you need to consider what your goals are.
I think a lot of, if you think on averages and whatever, the 2% of term insurance, only pays out.
Yeah.
And so like in our industry, we have to think, and do work on averages, but like what about the person that's not the average?
There's a lot of non-average people. Yeah.
And passes away early or things like that. And
right.
So
you also brought up a point earlier about people think a couple $100,000 is a lot of money.
Yeah.
You got a 4-year-old and a 1-year-old, right?
Yep.
Holy buckets. It's going to cost a lot of money for your family for the next 20 years of your life. I don't know what those boys' college is going to be, but it's going to be a bunch. And even if they don't go to college, just getting them to that, cars and proms and doctor visits and mortgage payments and food. And my goodness, I've seen your boys eat food. There's a lot of food they're going to eat. A lot of goldfish in your future.
We need a whole truckload of cuties. That's what we need. Orange, geez, go through those.
Oh, Rune eats those things, doesn't he? So anyway, also, if you're going to buy term, at least have that, right? At least have something.
Yeah.
Make sure you buy enough because it's so inexpensive to buy it.
Yeah.
Make sure you have enough because a couple $100,000 is not a lot of money.
Yeah. I also think there are people out there that don't need insurance.
Sure, there are.
You're going to get to
absolutely.
It's definitely possible you can get to a point in life where you don't need insurance.
You bet.
Case in point, literally, we were talking about this morning, working on with a client and walking through, what we should be doing to better their situation and do they really need insurance? Do they not? We talked about long-term care insurance, all of those different things. And it really comes down to you can get to a certain point in your life where you don't need insurance, but man, it can sure make your situation look a whole lot better
Sure can.
if you do.
Yeah, sure can. Some people just don't. They don't do well with the unknowns, and insurance will take care of the unknown and make it a known.
Yeah.
If I die, this happens. If I go to a long-term care facility, we know this happens. It takes the unknown and makes it known, and it gives them a lot more peace.
Yeah. Why don't we talk? It's not really about today's topic, but it bleeds into it. But let's talk about long-term care a little bit.
Okay.
So, at least with the folks that I meet with, long-term care is always a concern. I would say most times is a concern, I guess. But they always followed up with, "Man, that's really expensive."
Expensive, yeah.
And so I always like to, I tell them, yes, you're probably right, but you're also probably thinking about kind of the older version of long-term care insurance, where it's like your car insurance, meaning you're going to pay a premium, and unless you get in a wreck, you're not getting anything out of it. So the older type of long-term care policies,
That's the way they worked, yeah.
that's the way they work, meaning you're going to pay and you're going to pay and you're going to pay and you're going to pay, and then maybe you're not going to need it and you're not going to get anything
Yeah,
out of
money
it.
wasted.
And so a lot of if we are using long-term care for whatever situation with one of our clients, it's more like what they call asset-based long-term care, which, well, an easy way to look at it is just life insurance that you get the death benefit on early if something happens to you.
Yeah.
And so somebody somewhere is getting money back out of it. It's just you might have to be dead to get it.
Yeah. No, I think that's a great topic right there. A great way to, maybe we can kind of evolutionize this concept of life insurance.
Mm-hmm.
Life insurance used to be I had to die to get it.
Yeah.
Period. That was it.
Mm-hmm.
And it's now morphed. It's evolved into I don't have to die to get the benefit. I can be alive and get income from it. I can be alive and just reach in and pull buckets of money out for myself, or I can be alive and accelerate my death benefit.
Yep.
If I go to a long-term care facility, I can take my death benefit now and use it to pay for my long-term care insurance. Man, that makes my long-term care. That makes a ton of sense because I know I'm going to die. I'll get the money back out of life insurance if I'm dead, or if I'm not dead and I need these other things, it also pays for that. The old way of doing long-term care, it's kind of a dead thing. It's not going to go anymore.
I always explain it like this. Maybe you'll disagree with me, but there's kind of like three types of people, right? There's the people that, and I'm just making numbers up, that have, I don't know, 400, $500,000 of dollars,
Okay.
right? And maybe some Social Security, but that's kind of what they have for income, and they got to make that $500,000 last
for a
the
long
rest of
time,
their
yeah.
life, right? And those are the people that probably need the long-term care insurance, but it's going to be a little hard for them to afford it, right? And then there's the people that are from $500,000 to a couple $1 million of investable assets that are and maybe have more income, rental properties, pensions, whatever the case may be. They probably are okay, right? If they don't have long-term care insurance, but it's gonna if they go into that type of a need, it's gonna take a pretty big
It's
chunk
gonna eat
out
into
of
it,
their
yeah,
estate.
right.
And then there's the people that are the 3, 4, 5, 6 whatever millionaires, and they're probably going to be fine, right? Is that a
I
fair way to
totally
look
agree
at
with
it?
that. Even if the person has $3 or $4 or $5 million, they still may not want to give up.
Exactly.
You go to Alzheimer's unit. You
Yep.
could be there 10 years, right? They
Yep.
could be $1 million. That goes
And
out of your-
to your point earlier, it just is a peace of mind to them too.
It is.
So
Makes the unknown known.
Yep. No, that's good. So if you have more questions about any of this life insurance things that we were talking about today, you can go to retirewith210.com. We've got a couple of cool little booklets on that there. So check that out if you want to. But I guess anything else on life insurance for the day?
I think everybody, I don't care who you are, you at least consider.
Yeah.
Whether you care about yourself or care about somebody else, well, that pretty much encompasses everybody.
Yeah.
Consider it. Consider taking a look at the benefits of it.
So my tip of the day, since we're
Can't
talking
wait.
about,
This is what we've been waiting on right here.
I thought we'd
Drum roll, please.
sweeten it up a little bit since
right.
we're talking about death a lot right now.
Oh, boy.
Right? It's springtime, at least at the time of the recording, right? So you need to go get some ice cream.
Okay.
If I were going to get ice cream, I'd go to this place called Kamela's
Oh,
Creamery.
man.
They actually drive around to different locations. You can just look
The
them
best
up,
ice cream known to humans.
look them up on social media, find out where they're at. May or may not be my sister that owns the place, but
It may or may not be, but I'll tell you, if you've been to one of our client events with that little camper trailer they've converted into an ice cream thing, you know Camela's is the absolute. What do you kids call it? The bomb.
the bomb.
That's what I think. That's good. I think ice cream.
I don't
the
think
bomb
the
is
kids
good.
call that anymore.
Yeah,
That's
whatever.
like a couple generations
Yeah,
ago.
maybe
Now
it
it's
was.
like, I don't know.
It's the best ice cream known to mankind.
Yeah.
Get some.
All right. Well, thanks for tuning into Your Retirement Blueprint podcast. Coming up on our next episode, we're going to talk about what to do in a market downturn.
Thanks for watching, guys.
See ya.